The fifth factor in determining if a business is a quality business or a quality investment is looking at the returns on capital. And to summarize returns on capital, we're looking at the assets of the company and comparing that to the earnings or the profit of the company. This is a very important metric to look at. The reason is, as companies are growing over the years, the returns on capital is what you should expect your investment return to be. So if a business has a 6% return on capital, you should not expect to earn more than 6% on that investment annually. If a company has about 15% return on capital annually, you should expect about 15% as a return on your investment, or your investment to grow at 50% per year. So since we're long-term investors, we want to make sure the returns on capital are very favorable, or at least more than the average return of the market. Like the revenues and like the gross margins, the return on capital is not really an important metric to look at in and of itself. We have to compare that to its competitors. Another reason why this metric is important is it lets you know who has the competitive advantage in the market and who doesn't. The companies with the competitive advantage have higher returns than their competitors. They're able to charge more for the same product, and they're able to control costs better than their competitors. Those are the companies with a true competitive advantage. So again, I like to look at the numbers and the hard facts and allow that to tell me the story of the company as much as possible versus guessing or using my bias or my experience to tell me about the company. Yes, your experience is very important, but the numbers, in my opinion, are much more important than your experience. You can have a great experience with the product, but that doesn't mean that's a great business. It's just a great product. So returns on capital, we're looking at the profits of the company and comparing it to the assets. And we want companies that have higher returns than their competitors, identifying a competitive advantage in the market.